Hello, Namaskar and welcome to Bhaarat Wealth, your trusted channel for clear, data-driven and practical stock market insights. The Indian stock market witnessed a high eventful week between February 16th to February 21st this year. We saw a sharp rally, sudden corrections, strong foreign investor activities, sector rotations, IPO momentum and the impact of global geopolitical tensions, all within just 5 trading sessions. In today's detailed weekly wrap-up, I'll walk you through everything that moved Dalal Street, from benchmarking index swings to sectorial trends, from foreign portfolio investor flows to macroeconomic signals, in a structured and easy to understand format. So let's begin with the benchmark analysis. On Monday, February 16th, the BSE Sensex surges nearly 650 points. This rally snapped a 3-day losing streak and restored short-term confidence in the market. Buying was clearly visible in financial stocks, energy majors, and select index heavyweights. Domestic institutional investors stepped in aggressively, absorbing supply at lower levels. This suggested that investors viewed the recent dip as a correction rather than the beginning of a structured downturn. At the same time, the Nifty 50 gained more than 200 points and reclaimed the 25,500 level. Technically, this was an important recovery because the index moved back above a key short-term resistance zone. Momentum indicators stabilized, volatility cooled temporarily, and market depth improved, meaning more stocks advanced than declined. However, the momentum didn't remain uninterpreted. On February 19th, markets witnessed their sharpest fall in over 2 weeks. Profit booking intensified after the early rally, and global uncertainty weighed on investor sentiment. IT stocks and metal stocks faced considerable selling pressure. The correction was broad-based, but it was not panic-driven. Volumes indicated controlled selling rather than forced liquidation. Then came Friday on February 20th. The Dalal Street stacked a strong comeback. The Sensex gained over 300 points and the Nifty recovered more of its midweek losses. Banking stocks and capital goods counters led the rebound. This pattern, fall, stabilize, rebound, demonstrates that domestic liquidity remains strong and buyers are willing to accumulate quality stocks on decline. Now let's talk about what influenced the volatility during the week, global and macro factors. One of the key external triggers was rising geopolitical tensions between the US and Iran. Whenever such uncertainty rises, global risk appetite weakens. Emerging markets like India experience short-term volatility due to cautious global flows. Oil price fluctuations added another layer of uncertainty because crude prices directly affect India's inflation and fiscal outlook. However, on the domestic front, the macroeconomic picture remains stable. The RBI indicated that foreign capital inflows have strengthened recently. Improved trade relationships and macro stability are supporting India's external position. Forex reserves remains comfortable and the rupee showed relative stability compared to other emerging market currencies. Additionally, infrastructure output data for January showed approximately 4% year-on-year growth. Core sectors such as steel, cement, electricity, and coal contributed to this expansion. This data reinforces the narrative that India's industrial activity continues to move forward steadily. Next, one of the most significant developments this week was the shift in foreign portfolio investor behavior. After months of sustained selling, FPI turned net buyers in February. Over 33,000 crores flows into Indian equities across multiple sectors. Financials and capital goods stocks were among the key beneficiaries of these inflows. This shift suggests that global investors are regaining confidence in US medium-term growth prospects. However, the inflows were not uniform. The IT sector witnessed nearly 11,000 crores in selling. Global demand uncertainty, concerns about technology spending, and AI-driven structured disruption influenced investors' positioning. This clearly indicates sector rotation rather than a broad exit from Indian markets. Let's now examine sector performance. Banking stocks displayed resilience during volatility sessions. Credit growth trends remain steady and asset quality continues gradual improvement. Large private banks attracted consistent institutional inflows. Capital goods stocks rallied strongly during the week, supported by optimism around government infrastructure spending and robust order books. Engineering majors L&T touches a fresh 52-week high. Strong execution capability and order inflows strengthen confidence in the infrastructure cycle. On the other hand, IT stocks underperformed significantly due to global demand concerns and valuation adjustments. Defensive sectors such as FMCG and pharmaceuticals showed relative stability, providing balance during high volatility sessions. Next, in the derivative segment, the National Stock Exchange imposed additional margin requirements on selective features and option stocks. This move aims to curb excessive speculation and maintain systemic stability. Higher margin requirements reduce leverage and help prevent disorderly market behavior during volatility periods. The volatility index spikes midweek before cooling towards Friday. Intraday swings were sharp, reminding traders about the importance of disciplined risk management. Next, IPO and primary market activities. Despite volatility in secondary markets, the primary markets remains active. Over 4,000 crores worth of IPOs are scheduled in the coming weeks. Retail participants continue to be strong, reflecting growing equity awareness among Indian investors. Upcoming IPOs span manufacturing, consumer businesses, and diversified sectors, indicating healthy capital formation. Strong IPO pipeline suggests that corporate India remains confident about long-term growth prospects. Next, broader market observations. Mid-cap and small-cap stocks saw selective profit booking during this week. High valuation and global risk aversion triggered sharper swings in high beta names. However, the broader structured growth narrative remains intact. Next, market outlook. Looking ahead, markets will monitor several critical factors. A global bond yield and crude oil prices will influence risk appetite. Continued foreign portfolio investors' flows will determine liquidity direction. Domestic macro data and commentary from the RBI will also play a key role. Short-term volatility may continue, however, India's structural growth drives strong domestic demand, infrastructure expansion, stable financial systems, and improving capital inflows remain supportive. For long-term investors, disciplined allocation, staggered investing strategies, and sector diversification remains prudent approaches in the current environment. And that concludes your complete and detailed weekly stock market wrap-up for February 16 to today. If you found this breakdown useful, please like this video, share it with fellow investors and learners, and subscribe to Bhaarat Wealth for consistent, in-depth, and reliable market insights. Comment below and let me know, do you expect market to break higher next week, or we heading into future consolidation? Until next time, stay tuned, stay informed, stay disciplined, keep building wealth the smart way. Jai Hind, Jai Bharat.